And I'm going to say it too.
Okay. Okay, go. Good evening, everyone. Thanks so much for joining us for this webinar about getting maximizing the forgiveness for your PPP, Paycheck Protection Program loan. I'm Karen Kelleher. I'm the Executive Director of LISC Boston. LISC and Amplify Latinx, our host for the the webinar tonight, are members of a coalition that's called the Massachusetts Equitable PPP Access Initiative. And if you don't mind, I'll start by telling you what that is and why it is. If Betty will take me to the next slide. Can you take me to the next slide, Betty?
We are, hold on, I may have to do a new share.
There we go. We're seeing it.
All right, there we go. Yes.
We are recording the webinar tonight, and you will receive a copy of it if you're signed up for the webinar. So you will have the recording to share or to refer to. We'll also be providing documents you can refer to after the webinar. But Mass Equitable PPP Access Initiative is a coalition of more than 40 organizations, and it's only been in existence about a month. It was formed because after the first round of paycheck protection loans, when about $349 billion of federal money was loaned out on a forgivable basis to small businesses, many, many small and minority-owned businesses were left out of that for a variety of reasons. And it's all credit to the SBA for implementing this program so quickly and doing so much lending so quickly, but the structure of the program and the way it was rolled out made it hard for small and minority-owned businesses to access the program. Funding was gone in less than 2 weeks. When a second round of funding was about to be authorized by the Congress, this coalition came together and said, we need to get a different outcome in a PPP round 2. We need to have bank slots that are available to these businesses, and we need to provide the technical assistance they need to be able to access these loans. We brought together business support organizations with relationships with small businesses, community development financial institutions with the ability to provide technical assistance, banks who are willing to make PPP loans to these groups of businesses, and foundations and government agencies to support us. On the next slide, you'll see just how many organizations came together in a very short period of time. Betty, can you take me to the next slide? More than 40 organizations of all types. I'm absolutely not going to go through them. We have several represented on the panel here tonight. And here's what we're going to try to do tonight. What we've been doing as a coalition is working with almost 600 minority-owned businesses, providing technical assistance and helping them access PPP loans. Of those, about a third have gone ahead and received a PPP loan, had it approved. This webinar is about what to do once you've received those funds. How do you spend them in a way that will maximize the forgiveness of that loan? So tonight we're going to provide an overview of the forgiveness rules, and I want to just be clear, they're not complete. The SBA is still working on these rules, and we will be updating our guidance and doing additional webinars, but we know that you've already received your funds in some cases, and you're going to shortly, and we want to make sure that you understand the rules you're playing in. We will have more detailed guidance available to you online. We're also going to explain to you how you can get technical assistance and other resources to help you with this program, but also other challenges you're facing in the wake of COVID-19. And if you haven't already applied for a PPP loan, there are still funds available, and we can still help you apply for the program. I'm going to turn this over now to Betty Francisco, who's going to be our moderator tonight. Betty?
Great. Thank you so much, Karen, for that introduction and the background on the Paycheck Protection Program. So everyone, welcome. Thank you so much for joining us this evening. I'm really excited to host this webinar on behalf of the PPP Coalition. I am Betty Francisco. I'm the co-founder of Amplify Latinx. On this webinar, we are also joined by our Executive Director, Rosario Ubiera, our other co-founder, Eneida Roman, and behind the scenes, we have Wendy Hernandez, who is an amazing ED. So I want to welcome our panelists this evening who are going to walk us through the PPP loan forgiveness details. And all of these individuals have been incredible providers for us. One is Nicole Almeida. She is the Senior Vice President and Chief Marketing Officer at Bay Coast Bank, one of the lending organizations that stepped into the initiative early on and has been an amazing partner. Luis Roman, he is, again, a superstar finance person that's been a TA provider for us. Amplify and Surfside Capital are partners. And Luis has been incredible with our Latino community, providing technical assistance in Spanish. In addition, Amin Benali, Managing Director of Strategy and Development at Leaf Fund, has been our resident expert as well. Every technical question that we have that we couldn't find an answer to, Amin has been there front and center and providing the details for. And then, hold on one second, we have Roberta, oops, so sorry, Roberta, who, and I'm being hidden here, so one second. Roberto Circo, she is a CPA and a director at Kevin Martin and Associates. She has been our resident accounting expert. So welcome to all of them. They will introduce themselves a little bit further as we get into the webinar. I now want to take us through a couple of logistics. So this webinar is being recorded. We will provide everybody with a recording tomorrow. Everybody is in mute mode, and we want you to ask questions. We would like you to give us feedback, and you can either use the chat function, which is at the bottom of your toolbar, or you could use the Q&A function. We're gonna take questions at the end of the webinar, so you'll be able to raise your hand and I can unmute you if you'd like to speak, or I could just take your question through the chat. At the end of the webinar and tomorrow, when we send our follow-up email with the recording, we will have a survey, and we'd love to get your feedback. So please complete that so that we can improve this webinar and the content. Next, want to just do a shout out for our friends here who are helping us with the webinar today. So Bay Coast Bank, again, as I mentioned, Amplify Latinx, Surfside Capital Advisors, Leaf Fund, and Kevin Martin and Associates. So thank you. Please do share information that you're learning here. Use social media. Our hashtags is Equitable PPP, and our Twitter accounts are here. So please share information, and we hope that you will join us in our future webinars as well. There will be a Spanish version of this webinar that is being done on Tuesday, and we'll provide follow-up information in our thank you email tomorrow for those who would like to join the Spanish version. I am now going to launch a poll because we wanted to get to know who is on the webinar. We have about 120 people on so far. So I am going to launch this now. And Wendy, should I launch or should you?
It is actually launched.
It is launched. Okay. I can't see it. Oh, here we go. Okay, great. So I'm going to give it one more minute so that all of you can indicate what type of business you are, if you're joining us as a support organization, community organization, if you've already applied for PPP or still looking to apply. And just to reiterate what Karen mentioned is there is still about $90 billion left in PPP funding. We all thought that the funding would go very quickly because of the way round one went, and there's still a lot of capital available. So if there's anybody on the webinar that's interested in learning more and how to apply, we have a number of TA providers that can support you in going through the terms of this loan and how to apply. And we do encourage you to do that because we don't want to leave money on the table. All right, so I think we have, all right, so Wendy, did you share?
Yes.
All right, so perfect. All right, so what type of business? So about 57% have businesses with employees, 20% are sole proprietors and independent contractors, and 25% of you are community organizations or providers. Did you apply for a loan? So yes, 86% did. So thank you for joining us. and no. So this 14% that has not applied, we hope that you will consider it. We asked if you've received your funds, because we know in round one there was quite a bit of delay in getting funds. So 80% have said yes, 5% no, and 14% did not apply. And then in terms of how much, so less than 5,000, we have 4%. 29% of you got between 5 and 25,000. Another 25% between 25 and 100, and over 100, 25%. So that's pretty good. Good, fair mix. All right, so I'm going to stop sharing the poll. And can you all still see slides? Yes. Okay. All right. So now I am going to turn this over to Nicole, who is going to walk us through the PPP program. Nicole.
Hi, good evening, everyone. Thanks for having us. As Benny mentioned, Bay Coast Bank has been part of the coalition from the beginning, and we are happy to be a part of the coalition and be able to assist small businesses, who is the purpose of the Paycheck Protection Program, in getting the funds that they desperately need during this time. So we're happy to be here, happy to help out, and looking forward to helping through forgiveness as well. So with 80 some odd percent having already applied, I'm gonna sort of just go through this a little quickly. So you all know SBA Paycheck Protection Program loan, it really is just a loan in name only. So your loan is 100% forgivable, but you must comply with certain criteria to do so, and some of them listed here. So funds need to be spent during a specific time, funds have to be spent on eligible costs, and several other requirements as well. And so while the PPP program, is good for many, and it appears as though many of you today have applied and have thought that it was right for you, it does carry a lot of challenges for some small businesses, and we've listed some here as well. And it may not be a good fit for everyone. Those of you that haven't applied, please consider, take a listen to what's being presented today, and know that there are funds still available, and we do think that they're going to be available for a bit. So after today, if you have any more questions, I'm happy to be available to answer any questions. But so we do hope that the information that you receive in the rest of the presentation makes things a little clearer to you in regards to whether or not to apply if you haven't already, and then for 80% of you, how to make this a forgivable loan as opposed to a 1% loan if you're not able to get it forgiven. So we hope that this is helpful. If you want to go to the next slide, Betty. So the coalition put together a checklist of sorts, just 5 things that you really should consider to increase your chances of having your loan fully forgiven. These are not absolute. There's a lot of guidance that hasn't been released in regards to forgiveness, but it is sort of the best guess based on the information that we do have available to us, and what you can do in order to stay organized, stay on top of it, and make the most out of the forgiveness for you. We're going to go through each one of these steps in a little bit more detail in the next couple of slides. So I think that we're going to start off with the first item on the checklist in the next slide, Betty. So from a banker lender perspective, this really, I cannot stress this particular slide enough, and I know there's going to be a lot of important slides, but from the bank's perspective, there really isn't any guidance for lenders as of yet as to what our responsibility is going to be in order to help you get your loan fully forgiven. And so with that, keeping your loan proceeds in a separate account and managing things through that one account will allow us in the long run to assist you better. Being able to have access to the information that we're not sure we're going to need yet in one central location will kind of help on both sides once we do get guidance and really know what our role is in helping you get your loans forgiven. So definitely the recommendation is many of your banks may have required you to keep your loans, your proceeds in a separate account, and that's great. If you don't have it that way, that's okay as well. I think you'll get some other tips and tools to use going forward, but it does make sense to keep those things together so that you can quickly access the information that you may need to provide to your lender or to the SBA in the long run. I'm going to turn it over for the next couple of steps to Roberta.
All right, thank you, Nicole. Good evening. Again, my name is Roberto Circo. I'm a tax director with Kevin P. Martin and Associates. We're a CPA firm here in Massachusetts. We got involved with the coalition to provide some, accounting support to help with the TA providers work with the businesses as they were going through the application process, and will continue through the forgiveness application as well. So I'm going to spend a few moments going through a few slides here, primarily covering some terminology that's really important to fully understand to allow you to maximize the amount of forgiveness on these PPP loans. So it's a little granular. I'll try to keep it pretty high level, but if you have questions, we can certainly dive deeper through the Q&A. So before you spend even $1 of your PPP funds, you're going to want to determine your 8-week covered period. This is this 8-week period. It's 56 days. It begins the date that you received your PPP loan. So if your PPP proceeds were dispersed to your business today, your 8-week spending period would begin today and run for 8 weeks. And end, if you look on the calendar, it would end 8 weeks from now, which is June 15th. This is really important as you start to develop your spend costs to determine, if you're going to be able to utilize the loan proceeds in the period that you're allowed to. The forgiveness application does provide for what's called an alternative payroll covered period. We'll cover that in more detail in a few slides. Next slide, Betty, please. So loan forgiveness can only be achieved if the money is spent on certain eligible costs. These include payroll costs and non-payroll costs. Non-payroll costs include rent, utilities, mortgage, interest, does not include mortgage principal payments. So if you're trying to maximize your loan forgiveness, then you'll want to look at these costs and develop a spend plan. If you're not using your PPP funds for eligible costs, you're going to run the risk of not having that PPP loan forgiven. And so, the focus here for us today is just to focus on what you need to do to maximize forgiveness. So create a plan, budget for how you're going to spend your PPP loan proceeds before you start spending them, and then follow that plan. The SBA did establish a guideline that not more than 25% of your loan proceeds can, your loan forgiveness amounts can be used for non-payroll expenses. The purpose of the PPP program was to keep people employed, keep them on payroll. So, the focus was, let's spend the majority of the funds on payroll related costs. So you'll want to try to spend at least 75% or more of your PPP loans on payroll related costs to maximize that forgiveness. So let's just take a quick example. If you had a $20,000 PPP loan and you only spent $12,000 on payroll costs and $8,000 on rent, utilities, mortgage interest, the maximum potential loan forgiveness that you'd be eligible for is $16,000. The math here, it's $12,000 of payroll cost. You divide that by 75%. That gets you to the $16,000. That does not factor any potential reductions, which will be covered later on in this presentation. Next slide.
Roberto, quick question. A couple people are asking, can 100% be used for payroll and still
Yes,
have it?
absolutely. Minimum of 75%, but if you spend 100% of your payroll costs, 100% of your PPP on payroll costs, that actually probably puts you in the best position to have your loan forgiven.
Okay, thank you.
All right, I'm not going to spend too much time on this slide here. This is what gets included in payroll costs. It follows pretty much the same definition that was used when you applied for your PPP loan. The application asked for 2.5 times your average payroll cost. That's essentially what's laid out here. So your eligible costs are limited to compensation of employees with annual compensation up to $100,000, prorated over the 8-week period. It's about $15,000, a little more than $15,000 per employee. Next slide, please.
And just quickly, is that the paycheck amount or can tax withholding count in the spending?
The payroll costs are based on gross wages, essentially. So it's not your net payroll, is my understanding. Of course, additional guidance may come out to clarify that even further.
Okay, great. I just want to make sure there's some comments that the slides are not advancing. Can you see this next slide?
I can.
Yes.
Yes.
Okay, great.
So as I already mentioned, there is an alternative payroll covered period. The intention here was to provide an administrative convenience for borrowers to allow them to use, if they use a biweekly payroll schedule, or more frequently to align their payroll costs with their standard pay periods. It just allows for easier tracking, if you will. So if you run payroll twice per month or monthly, you're not going to be eligible to use this alternative method. If you do choose to use the alternative method, you'll need to maintain some consistency throughout the forgiveness application with respect to other related payroll costs like your employee benefits. It'll need to follow that same calendar. And also that alternative 8 weeks would also be used in calculating your average FTE and your average wages on some of the supporting schedules of that application. So regardless of whether you use the covered period or you use the alternative payroll covered period, payroll costs eligible for forgiveness must be paid during whichever method you choose, with one exception. Payroll costs incurred but not paid by the end of the applicable period are still eligible for forgiveness, provided they're paid on or before the next regular payroll date. So again, I'll just sort of stick with that same example that I used previously. If your loan proceeds hit your bank account today and you're using a weekly pay period, you'd be eligible to use this alternative payroll covered period. So let's say that you have weekly payroll that runs Sunday to Saturday. Your payroll is paid the Friday following the end of that pay period. If you elected to use this alternative method, your 8-week period would begin on this coming Sunday, May 24th, and it would end on 8 weeks from that, which would be Saturday, July 18th. You would end up using 2 separate 8-week periods, depending on what type of cost you're handling. This alternative method is strictly related to payroll. You have to use the standard covered period when it relates to non-payroll costs. So I just want to make that point clear.
And Roberta, on the period of time, the 8-week clock, can you just confirm it starts when you get your loan proceeds, or can it start after you decide to rehire your employees? So there's a question from somebody who has a business that's currently closed and they are going to reopen next week. When would their 8-week covered period begin?
That 8-week covered period begins the day you receive your PPP loan proceeds. So understood that there are businesses that either were mandated to shut down or have shut down for various reasons, and you may not have employees. There's no work for those employees to do at this time. There is some concern about that. There's been no further guidance on that. There's potential that, maybe down the road, the SBA will provide more guidance or maybe some alternatives. But at this time, we're working with 8 weeks from the date you receive your loan proceeds.
Okay.
Okay. So your spending plan, in addition to the payroll costs, should also include non-payroll costs. As noted before, payroll costs should be 75%, minimum 75% of your total spend, and you can budget up to 25% of your spend on non-payroll costs, including rent, utilities, and mortgage interest. For each of these, the agreements relating to them need to have been in effect as of February 15th, 2020. Mortgage principal payments, again, are not eligible, just simply the mortgage interest portion. And as far as utility payments, that would include electricity, gas, water, transportation, telephone, and internet access is what's outlined in the forgiveness application there. So again, there's an example here. If your PPP loan is $10,000, only 25% of the loan proceeds can be spent on these costs to be eligible for forgiveness. If your actual costs relating to non-payroll costs are greater than this, you'll have to use other funds or have a reduction in the amount that is forgiven. So again, any costs that are paid that will not be forgiven, those proceeds, the loan proceeds spent on other costs will not be forgiven. You can use them for working capital. They will need to be repaid or within 2 years, starting in 6 months. And we'll get into some more of those details on some following slides. Right now, I'm going to turn things over to Luis.
All right, Luis, welcome.
Thank you, Roberta. Thank you, Betty. I'm Luis Roman, and I work for Surfside Capital Advisors, which is a consulting firm focused on helping small and mid-sized companies. And I've been involved with the coalition since the beginning as a technical assistant, helping small business owners with the application process for the PPP loan. As Roberta said, so now after you got your PPP proceeds and you had your bank account and you actually kept track of your expenses, there will be a time later when you actually going to be ready to apply for forgiveness. And as it was mentioned earlier, depending on how you spend those funds, a portion of your PPP loan might qualify for forgiveness, which basically makes that portion a grant or a subsidy that you could use to help your business. Along those lines, I would like you to keep in mind that the main goal with this section of the CARES Act was actually keep the workforce as intact as possible. And therefore, what that means is that if businesses were not able to keep the workforce as close as they were before the cover period, there will be a penalty and that penalty will be in the form of some reduction that might come, that's going to be taken away from the forgiveness amount you're going to have to calculate. Last Friday, May 15th, that was the first day when we when the SBA first released the application form with instructions, and where also there is included a Schedule A and a worksheet that is meant to help business owners with these calculations. But basically, the two main things that I would like to sort of summarize in terms of what could affect the total amount for forgiveness are two things. One is whether or not you had employees for which the wages were reduced by more than 25% during the covered period. That will be one factor that will affect the total loan amount eligible for forgiveness. And the second has to do with the average number of full-time employees that you had right prior to the application for the PPP loan, which is calculated using an average during the reference period, compared with the average of full-time employees during the cover period. So I'm gonna just also answer a question that was brought up earlier about whether, and I think the question had to do, I think the question was along the lines of when does the cover period starts, and Roberto actually said correctly, it is when we receive the proceeds, but I have a feeling that the question has to do with precisely when you do this calculation, because when you start hiring, then you wanna make sure that you are actually pretty close to the same number that you had when you apply for the loan of full-time employees. But the thing is, and we're not gonna get into those details today, but the thing is that these numbers of full-time employees during the reference period, which means prior to the application for the PPP loan, and during the cover period are actually average during those times, which means for the business owner that the earlier you start rehiring people during the cover period, the higher the chance that you're gonna have actually forgiven the whole eligible portion of the loan, okay? So that, and also I should say that they included some safe harbor conditions that if are met, you also going to be able to basically get the full amount of the full amount eligible for forgiveness in the PPP loan. I think the next slide is actually the one about something that I think I encourage you also to consider this, although this is kind of I would say it's more helpful for those who are still perhaps on the fence or to, well, actually, if you haven't used the funds, you still can think about this, because this is comparing the benefits that use of your PPP proceeds versus the benefits that are coming from the pandemic unemployment program. And basically here is that there are cases, and I did see myself a few of those working with the coalition, where depending on the PPP loan amount, or likewise or equivalent, depending on the payroll that you have in there, your employees, or even yourself, if you happen to be an independent contractor, a sole proprietor, it could happen that you might be better off actually with unemployment benefits. And I'll give you a very basic example. Let's say that somebody actually qualifies for unemployment benefits in the order of $3,600 a month, which is basically weekly of $900. For that person, for a PPP loan to work, to be worth the effort, I would say that the PPP loan will have to be at least of $10,000, because out of those $10,000, you would need about 75% of that, at least in payroll, which is basically what is gonna pay for what you're getting as a salary, as a wages. And that will cover your $7,200 for 8 weeks, and then the rest you still can use it for other expenses in your business. But the difference being with the PPP loan, anything in excess of that was used not for eligible, you still will have to pay it. And you also have to basically provide documents that actually show that how you spend these funds, versus with the unemployment, you're all set. So this is something for you to consider. As a matter of example, in terms of
Luis, just a quick confirmation.
Yeah.
So if someone has a question about the period interplay between PUA and the loan. So if you've gotten the loan and perhaps you've used the PPP loan, can you then apply for pandemic unemployment after? So that as long as there isn't an overlap between the two, both benefits could coexist, right?
That's right. As long as there is an overlap, and my understanding too is that those already were approved and let's say either are waiting still to receive the proceeds or actually receive them but have not spent it, if they realize later for some reason or another, including this of the unemployment benefits, that they are better off without it, I think there will be ways for them to actually repay the loan without any consequences.
Thank you.
I think in the next slide, what I'm going to do with the next slide is basically show you the impact in the reduction amount of the forgiveness of your loan, depending, as I said before, on two factors. Depending on the average number of full-time employees that you had during the reference period and during the cover period, and also depending on the reduction in wages that your employees experience during the cover period. So in this first slide, we have the case where somebody, let's say in all three cases, just to keep things simpler, I'm taking a loan that the whole amount was actually 100,000, and I have in there some calculations, some hypothetical estimates of a payroll cost about 80,000. So that satisfy that it was at least 75% for payroll cost, and then putting in there something for rent and utilities. And therefore you ended up with an initial amount of 82,600 of payroll costs that are eligible for forgiveness. So let's say that you are a business that was able to have the same average of full-time employees before the PPP forgiveness application, and also before the PPP application. That means during the reference period and during the cover period. So in that case, you will not be penalized at all because you actually satisfy that condition of keeping basically the same workforce. And let's say also that for those employees, you did not reduce wages above 25% for any of them. So that means that in this table, you see in the lower section of the table, I have a 10. I'm assuming this is a company that has an average of full-time employees of 10 before the application for PPP, and also end up with 10 as an average for full-time employees during the cover period. Below the second 10, I have 0, basically, because this business owner was able to not reduce wages for any employees above 25%. In this case, the amount for eligible for reduction, for forgiveness after the first reduction is actually the entire amount. And because the ratio basically between full-time employees prior to PPP and full-time employees prior to the application for forgiveness was also the same, so 100%, you end up with the total amount eligible for forgiveness. So this is the best scenario where somebody actually was able to maximize the amount of that is eligible for forgiveness. In the next slide, please. Now I'm just changing this to somebody who reduced their workforce by 20%. Okay, remember always that this is an average. So the only thing that I'm saying here is that the average of full-time employees during the cover period, now you see again in the lower section of this table, you see an 8. So this person in average basically went from 10 to 8 employees. For this person, this quotient that is at the very bottom of the table of 80% is what is going to be used also at some point to calculate the amount that will be reduced for the eligible amount for forgiveness. So in this case, and I think, actually, I'm not seeing here in my screen, but I think I'm having a problem seeing the number below the 80%. Now I see it. So in this particular example, you see that your loan, basically, the amount that is eligible for forgiveness went from $82,600 to $66,080. Okay, so that is the first case where you actually lose something because you had a challenge to keep the same number of full-time employees. And the next slide would be perhaps the worst case out of, or at least based on these two factors, which is you also lost a couple of full-time employees in average during the cover period. But on top of that, to those employees that you kept, the average in wages reduction was about 50%. Again, this example is using a big hit in there. So in this particular case, the first reduction, which is the one that has to do, and that's in red here in the lower section of the table, that first reduction has to do actually with those wages that were reduced, basically brings your loan from $82,600 to $50,600. And then here comes the second reduction again, which has to do with the ratio of full-time employees prior the PPP application, and the application for forgiveness was 80%. You factored that in, and then this is going to give you an example of $40,408 that are eligible for forgiveness. So I hope these cases at least give you a flavor of the impact that can cause not being in, let's say, in fulfillment with all the conditions that will allow you to have the maximum amount eligible for forgiveness of PPP loan.
Just a quick note, because a couple people have asked this, Luis, and maybe Amin can chime in too. So there are a number of employers that want to provide raises to employees. Maybe not everybody came back, and they'd like to give them a raise or a bonus in order to give them an equivalent as to what they would get under PUA. Is that permissible? And what does that do to affect the forgiveness?
Okay, so I'm going to answer this with a caveat, which is the best interpretation that I have of this. I think it is admissible, and it's going to play a good role in the calculation here of wage reduction again, because you're computing an average. Basically, every week, actually, when you calculate this, every week you have to tab basically what was the wages and salary of each one of your employees. So if you give a raise in there, that is going to help you in terms of actually maximizing this loan. So I haven't read anything that will forgive you from doing that. And if anything, I would say it would improve your chances of minimizing or bringing to zero any reduction to these calculations.
Great. All right, Luis, thank you so much. So we are now going to transition to Amin.
I think Luis probably has to end with the slide.
Sorry,
Yeah,
Luis,
no,
you want to finish?
This is a
Apologies.
great segue. This is very short. So this is basically, you have to have a recovery plan. If maximizing forgiveness is not what is going to be the best for your business, you still need to then find out what will be the best options that you have. And in that sense, this is again what Amin is going to talk about, actually, which are going to be options that you have if maximizing forgiveness is not your top priority.
All right, Amin, do you want to?
Yes. Thank you, Luis. Thank you very much, and thank you, Betty and Karen, for the initiative and for including us and inviting us with this webinar. Truly appreciate it. My name is Amin Ben Ali. I work at the LEAF, the Local Enterprise Assistance Fund, a local CDFI in Boston, helping our local small businesses. We've gone through a fair amount of detail, and prior to this, several of you have gone through the process of applying for the PPP. With all the work related to it in terms of going through your records and books and making sure the numbers in the applications were correct and accurate. And as Karen explained earlier, the Paycheck Protection Program is a loan that is unique because of the forgiveness feature. Still, several business owners, might reach the conclusion that the program does not work for them for a number of reasons after they have applied and have received the funds. And so in that case, there are several options to consider and to keep in mind. The number one, the PPP is still a very flexible loan. So you're still looking at low interest rate of 1% with no payments for 6 months, no collateral, no personal guarantees, no credit checks, and all of this kind of apply during the application. And so using it as working capital loan would be potentially appropriate, and with the understanding and the plan that repayment will happen in 2 years. So that's an option. You always have the option to repay the PPP loan at any time. There are no prepayment penalties on this loan. You can hold on to the funds until the program rules, or more guidance becomes available. The program and the guidance has been evolving to the credit of the SBA and their staff. They put together this program very quickly as an emergency program. And deployed it fairly quickly, and so the rules have had to or they were flexible with the rules, and they have to change to be able to respond to what was happening on the ground. And so as the guidance becomes clearer, and as those rules hopefully evolve in a way that provide the businesses with more flexibility, then holding on to the funds and until the clarity is there is still an option, given that there's no prepayment penalty, and you can repay this at any time. There could be a small expense in terms of interest accruing during that period, but that's fine. So some of the what I want to go over right now is how to facilitate that forgiveness application process and increase the chances of getting the forgiveness that you need. So there are 4 items that we have here to follow your PPP spending plan, to keep clear records of your expenditures as you would normally with your business. To stay up to date with SBI guidance and consult with the expert and technical assistance providers, and the coalition is providing a lot of the expertise and making that available to the businesses. And also to stay in touch and stay engaged with your lenders, realizing that it is on you to trigger the forgiveness application. So you have to you have to initiate that process. So we'll go over some of these over these points with some detail. Following your spending plan, generally we advise our clients to produce budgets, at least 4 times a year, on a quarterly basis for review. Those budgets include your revenues, your expenses, so payroll, direct costs, variable, fixed costs like rent, maybe some utilities, insurance, etc. So generally, we advise businesses to produce budgets with that frequency, and some businesses choose to do that monthly, and depending on their circumstances. In this particular case, the items that you need for your spending plan reside within that budget. And so given that the PPP is so payroll centric, and both in terms of when you applied for it, what you had to supply in terms of information about your payroll, and also in the forgiveness process, a lot of the forgiveness hinges on how much was spent on payroll. And the reduction in that forgiveness is directly correlated with those reductions, as Luis and others on the panel have indicated. So making a plan upfront, or even in the early stage of that coverage period, is essential. And so several might have more visibility into their staffing needs for the next 6 or 8 weeks, perhaps more than they did a month ago, when we were in kind of maximum uncertainty and the numbers were peaking and there wasn't a lot of clarity. So, we advise to use that increased visibility to put together the plan. You already know perhaps what your rent expenditures are going to be. You probably have a sense of what your utilities are going to be, your interests on other loans and mortgages, and so perhaps the variable in the past had been that I don't know what to do with staffing, particularly if you're in a service industry that was affected by the shutdown in the state. But as you begin to gain some clarity, this is the time to put together a spending plan with the dependency on your payroll expectation. So that plan is critical. And as you're going through the spending period, it is very important to keep track and keep record of those expenditures. I think it was suggested earlier in the presentation that the funds be kept in a separate account, not commingled with the rest of the funds of the organization. And and perhaps all the expenditures that you expect in your plan to go towards to PPP forgiveness, that those expenditures come out of that bank account in such a way that the transactions are easily traceable, recognizing that your payroll supplier, to the extent you have one, might already have some built-in utilities that will help support your PPP forgiveness application. But as an extra layer of making sure that you're keeping track of the numbers and tracing your transactions, that is good practice. So the documents you need to keep are not too different from the ones you probably had to produce when you applied for the PPP. So your payroll reports and tax filings, your bank statements, canceled checks, any record of utility bills, any record of other bills, invoices that were settled with the funds that will go towards PPP. It is advised to keep all of those records in place, because you do have to document every dollar that you're asking for forgiveness on. The third element is to stay informed. And, and especially we are going through a period where the forgiveness applications or the need to submit those applications will increase. And also the need for guidance, both from the bankers and from the SBA will be greater. And so the flow of information will increase materially, and it is important to stay in touch. There are a lot of resources out there that will provide you with updates and information, and we certainly advise that you keep track of that information, both in terms of process of how to apply, but also the nuances of the application. Are there things, has the scope been expanded in terms of what expenses would be forgiven or not? That is important to stay on top of. And then the last point is staying in touch and staying connected with your lender. It is your responsibility to initiate the process of the forgiveness. The application form has been released last week. I believe the banks are still awaiting some more guidance in terms of how to, in terms of the process. And and so just keep in mind that this is part of staying informed, outside of just looking for information about the forgiveness process itself, but to get actual actionable items from your lending institution with respect to how you would apply for the application. There could be some nuances if lenders sell the loan, and who are the new lenders, who is administrating the loan. So it is very important to stay in touch and make sure that that you have firsthand information. And with that, I think I'll turn back to Betty, who will go over some of the resources that are available for you to stay informed.
Great. Thank you so much, Amin. And thanks to all of you. Thanks to Nicole, Roberta, Luis as well, and to Karen for walking through us this very, very technical information. We understand that some of it is hard to process. And what we want you to leave with is that there is guidance forthcoming from the SBA. We're committed as a coalition to making sure that We host multiple sessions of these webinars to answer questions. We will have our partners at the SBA also join us when the guidance is released. Quickly, I'm going to go through this very quickly because we have so many questions and we will not be able to get to all of them, but what I'm hoping we will do is pull out all of the questions and answer them separately, and we'll provide that as part of the follow-up. So just again, these are our technical assistance partners. If you need support either applying for the PPP loan, if you haven't already, or you need some support with applying for forgiveness. And remember, you can always go to your lender. You have to apply through your lender anyway. But if you want some support on, how to make your plan, what are the eligible expenses, how to think through it, our partners on the TA side, so Surfside, Capital Advisors, Mill Cities, LEAF, Neighborhood Business Loans, LISC, and Cooperative Fund, they're all providing support. And this is the link to apply for the program. We will send these slides out and you'll be able to click on these as well. For other technical assistance, Mass Growth Capital, the Federal Reserve Bank, SCORE, and the Greater New England Minority Supplier Development Council are all supporting on the TA side as well. And some also have other business supports in general to help your business reopen. For legal assistance, if there are legal questions that you have, you can always go to Lawyers for Civil Rights. They're an incredible partner. They're doing technical assistance as well, but they also take on different cases from a legal perspective. And there's also a coalition of different law firms that have joined forces to provide pro bono legal assistance to small businesses and nonprofits. I won't go through this. There's other types of financing. We're fully aware that some of you are, have payments that are due. This, crisis has hit many of you very, very hard. And there is some other financial support. We will send this out and it will have links for you. And we understand that more financial support is needed. So there's a lot of advocacy this group is doing on that to ensure that more grant funding, more lending is happening to help your businesses survive and to reopen. So we're now gonna go through, I just wanted to let you know where these resources are gonna live. So this presentation, along with a checklist and guidance document, is gonna live on 2 sites right now, on our Amplify Power Up site and on the LISC website. So you can always go there and we will be updating it as things change. All right, so for questions, we have a lot of questions. So I'm gonna go to our Q&A. And I'm not sure that we have time to do live questions, so I will try to moderate some of this in terms of what I'm seeing. So one thing that I don't think we've really covered that a few people have asked is if you're an independent contractor or sole proprietor, how do you pay yourself, right? So how should you manage the salary piece? Can any one of you comment on that?
I'm happy to take a stab at that one. Again, I don't see, because the calculations are based on an average over an 8-week period. It doesn't make a difference in that average whether you break what you used to get on a, let's say, 4-week period. It doesn't make a difference if you pay yourself on a weekly basis or if you pay yourself actually every 4 weeks. Because at the end of the day, you're gonna be actually summing those amounts and dividing by 8. So I don't see an impact in the way, if you are self-employed, in the way how you pay yourself over the life of the 8-week period. And I would say also in that case, you probably are in one of the easiest cases where you don't have to worry about wage reduction or changes in the number of employees. So that would be my interpretation of what I know.
Okay. Great. Just in terms of covered expenses, medical insurance, is that a covered expense?
Hi, Betty. My understanding is that it is. It went into, is that it is. It was it was part of the application process. Not that it would make it forgivable right now, but it was something that was part of for the application process. And then the understanding is that it is, as long as it is paid by the employer, or the portion that is paid by the employer, is a forgivable expense.
Okay, great. Now, can we clarify, there's a number of questions about expenses related to utilities, these are the 25%, and in terms of when they, what's the period of time? So could you clarify the period of time, the look back period? So if you had expenses, say in March, but you got your loan in April, can you look back?
So I'll take this one. My understanding on this is that the expenses need to be incurred within the covered period, the 8-week covered period. So if you incurred expenses in March and your loan did not begin until May, you're not going to be able to look back. Again, there may be further guidance on this that allows for that. But based on the guidance that we currently have, it specifically states incurred during the covered period.
Okay. Now, I'm seeing very similar, I'm just looking for themes here because we've got quite a few of these questions. So if you, we know that there's a number of firms that had to lay off employees. They're now looking to bring them back, but they're still uncertain on reopening. So if they have their employees come off unemployment, they pay them, and then they're not yet open, what should they do? Would they go back to unemployment?
I didn't understand quite well the question, Betty, I'm sorry.
So if you bring back employees using your PPP loan, but you're still not ready to open, and you utilize basically your funding, would those employees be able to go back on unemployment until you decide when to reopen again?
I think that the piece that I recognize from the question is, as long as nobody is overlapping, being paid by PPP proceeds and also receiving money from unemployment, there shouldn't be any problems with that.
Okay. And do you have to bring the same employees back that you had before the loan?
Everything is in effect. It's just that ratio of full-time employees that you had in average before the PPP application and during the cover period. So you could do whatever is best for your business in regards to how many you bring back, and that is going to affect just the calculation that you will have to estimate in order to calculate the reductions, if any, for the eligible amount. The example that I showed was somebody whose average, let's say, was 8 and it started with 10. In that case, that 8 over 10 or 80% would be a factor that would be applied to the eligible amount for forgiveness.
And I hadn't seen guidance or reference that links the forgiveness on the payroll side to employees that you had prior. So echoing what Luis said, it is based on kind of aggregate and average FTEs and compensation. Not necessarily, well, did you bring X employee back or specific employees back? If that were the question, but that's
it's not. I guess the main point that we're trying to get across is it's not based on a one date specific in the year or reference period. It's about an average during both the reference period and the cover period, and that might be different for depending on the business and how they bring the employees back or not.
Okay, so I know we are past time. I just want to get one more question in regarding EIDL. So if you received an EIDL loan, how does that impact your PPP? it gets deducted, correct?
The advance, yes. That's the amount that my understanding is will be deducted from the eligible amount for forgiveness. The idle loan amount itself, the other bulk of the loan, that what I've seen is something that you could use it, depending on the size of your loan amount, you could use a PPP to actually sort of a fund or refinance, so to speak, part of the idle loan. But the amount that will be deducted from eligible funds for forgiveness will be the idle advance amount.
Okay, great. Well, listen, I think this was incredibly helpful, a lot of technical information here, and there are many, many questions that all of you submitted, which are helpful to us so that we could see what people are dealing with in the moment. So we're going to take these questions, we'll summarize them, we'll try to do a FAQ as part of this that we'll issue as a follow-up to try to get to many of your questions, and we apologize that we can't get to all of them. But I want to thank all of you for joining us today. Again, I want to thank the MA PPP Equitable Coalition for organizing this, for hosting us. Thanks to all of our panelists, Karen, Nicole, Roberta, Luis, Amin, for joining us and taking the time to go through this. And again, we will be back. We'll be back when the SBA has their guidance issued, and we'll be back with them. So stay tuned for follow-up. Everybody have a good evening.
Thank you.
Thanks to you too, Betty.
Thank you.
Good job.
Thank you. All right. Bye, everybody.
All right.
Thank
The
you.
SBA did not want to do it.
Well, yeah, so we are going to stop